Hello, Jacquie Edwards here. Thank you so much for joining me today. So I have been getting lots of questions. Might be because it's tax time, or maybe it's just tax time for me because I'm just been working on all my company accounts and my US and my UK tax personal returns. Anyways, today I am going to be talking about how you can pay yourself from your property company. So I've been getting lots of questions about that. Now, there are a lot of options, and your best thing to do is talk to your accountant about your specific situation. So none of what I'm going to say is financial advice because I don't know your personal financial situation. And a lot of it will depend on, if you're employed somewhere else and getting a full-time salary or a part-time salary, or if you've got other payments coming in from other places. So I'm really going to be focusing in on what do you do when you have your property company as a limited company, and that is the only thing that you are working on. So that's the only place you're getting paid from, and how to pay yourself from there. Now, to back up, you don't have to have a limited company to do rent to rent or any kind of property investing. You can just do it in your personal name as a sole trader. In that situation, I highly recommend you have a separate bank account that you do all of your property investing in, and you will have to put all of that through your personal self-assessment tax return. Now, in that situation, it doesn't really matter. You won't pay yourself a wage or anything. It all just goes through your personal tax return. So there's not as many things you can do to mitigate some of your tax liabilities, which is why a lot of people will set up a limited company, because you've got more opportunity to kind of plan for the future and do a lot more financial and accounting planning. So how I pay myself is I've got my limited company. I've actually got a number of limited companies, but I've got one that's set up on PAYE, which is how you pay yourself. So I'm specifically talking about in the UK as well. So for anybody else, anywhere else in the world, this is probably not going to be super applicable. So I have one company that's set up. So you'd have your rent-to-rent company or your property company set up on PAYE. Now, you have to now report monthly in the UK electronically. So they've got this whole Making Tax Digital thing. So all your PAYE, you should be using an accounting software that will automatically report that, or use an accountant or bookkeeper that can do your PAYE for you. So you will, in order to pay the least amount of taxes possible, which is one option, you would pay the kind of lowest level of income up to kind of the national insurance level. So that way you aren't paying national insurance, your company isn't paying national insurance, because if you go above that threshold, and I don't know exactly what the amount is right now, it's around just under £900 a month. So once you go above that threshold, then you have to pay national insurance tax on your income, and your company pays national insurance tax as well. So ideally, to pay the least amount of tax possible, you keep it under that threshold, and anything PAYE, as long as that's your only income coming in, you won't have to pay any tax on that amount as long as you're under that lower level income. The next thing you do then to help get money out of your company more tax efficiently is pay a dividend. So there are different dividend thresholds as well, and it all depends on how much money you're making altogether. But paying yourself the minimum salary and then dividends on top of that is the way to be the most tax efficient. Now, these levels change every year. So, just do a quick search on the government website and it'll tell you, here's what the dividend level is for this year, the different tax levels, here's what the PAYE levels are. So you can easily get to know them that way. So this will be relevant forever, so I won't specifically give you the amounts, just go check them out. So minimum PAYE, so minimum monthly salary, monthly wage, and then a dividend on top of that. Now, you can only declare a dividend once your company is profitable. So especially with your rent-to-rent business, that first year you might not be profitable if you're taking on a number of properties. So you're usually having more costs than you are having income coming in, just because you're in that big setup phase where you're pushing through lots of companies. Now, you might have a profit in that first year, and you have to monitor that to see how much of a dividend you can take out. And that's pretty much the simplest way to pay as little tax as possible. Now, you might not want to pay as little tax as possible, because if you are looking to invest and buy properties, you want to raise buy-to-let mortgages, you are going to struggle to get a mortgage if your income is really, really low. So if you're only paying yourself £900 a month, generally dividends don't count towards your income for buy-to-let mortgages. Sometimes they can, but not always. So it will just be based on that £900 a month kind of salary that you're paying yourself. And that's going to look really low, and it's going to be a struggle for you to raise mortgages. So if you are looking at buying properties and you are the one that wants to get the mortgage in your name, now if you have a partner, so for me, I could pay myself this way because my partner has, a normal full-time job, and he's able to buy the properties that we buy in his name, and he's able to raise the mortgages. So I don't have any mortgages in my name. So I basically have a joint venture partner that does the mortgaging for me. So that's one option. If you pay yourself a limited amount of money, you can find somebody else to get the mortgages for you. If you want to get mortgages, then you're going to need to pay yourself more, which means you pay more taxes. At the end of the day, paying taxes is not the worst thing in the world. If you're paying taxes, it means you're making money. And we all want to be making money. The more tax you pay, that means you're making more and more money. Now, a lot of people are like, oh, rich people don't pay any taxes. They do. They just have the right power team in place so that they don't pay more than they have to. Whereas oftentimes, especially here in the UK, we don't have to file a tax return every year if you've just got a job. It just automatically comes out of your paycheck. You never even think about it. You never look into it to say, is that right or not? Is there anything I can do to mitigate that? So I'm saying, have a look through, what is your goal? Is your goal just to minimize taxes? Then have your limited company pay you that lower level salary and then pay dividends for whatever else you need on top of that. If you want to buy properties, that's probably not the right strategy. You're going to want to think about how much does that property cost that you're going to buy? What salary would a mortgage company be expecting you to pay? So maybe have a quick chat with a broker to see what they would recommend salary-wise that you would need to raise the funds for the types of properties that you want to buy. And of course, once you get more experience, and especially with buy-to-lets, it's less and less based on what your salary is and what your income levels are, but there is a minimum baseline. It is, my understanding is around £20,000 a year of salary. So keep that in mind as you're doing this, but with your limited company, you've got a lot more flexibility in how you pay yourself than you do when you've got just your sole trader. So that's often why people will move to a limited company when they can. But speak to a good accountant that can help you with your specific situation. Because like I said earlier, if you've got a full-time job and you're taking a PAYE salary somewhere else, then whatever you pay yourself in your property company, even if it's that lower level limit, is going to be taxable at higher rates. So an accountant or your bookkeeper will be able to look at the full picture of what you're doing and give you specific advice for your specific situation, because everybody's situation is different. Whether you're married, you're not married, you're supporting children, no children, whatever it is, that accountant will be able to kind of give you advice for your specific situation. I'm just giving a general overview of, if you've got a limited company and you want to minimize your taxes and that's your only income coming in, then keep your salary below that lower level income level and then pay dividends on top of that. So hopefully you found that useful. I have a course coming up where we will talk more things rent to rent. We will actually talk all things rent to rent. So we'll talk a little bit more about financing properties, which we kind of touched on a little bit today. And of course, we'll cover how to find your properties, how to pick your area, how to set up your business legally. So we'll go through the pros and cons of being a limited company or a sole trader. So if you want to join me, that is going to be the 21st of September. So head over to renttorentacademy.co.uk and check out the Unlocking the Secrets course. Otherwise, I will see you again next week. Have a wonderful week.